Hello everyone, very good morning, good afternoon, and good evening to all of you. How are you doing, guys? This is your host Vaibhav. In our today's session of correlation and regression, we will be considering the price action which we are observing to be quite volatile, particularly in aftermath of the release of US CPI numbers. We saw zip-zap movement in both the direction earlier. Immediately after the release, there was spike in the currencies like USD JPY, where the USD gained, and in a minute or so, it gave up all those gains only to bounce back again. So we don't really have that much directional clarity. The range has been expanding, but the momentum is generally of consolidation. The USD JPY is bouncing back. It is continuing its retracement from the lower levels closer to 132. Now it is getting back to one above 134. Now almost getting back towards 135 levels. So in these volatile markets, we will look and how things are likely to shape up in the US session, in particular the North American trading session. So let us now head to the JForex 4, the newly released trading platform from the Dukascopy Bank SA. This is the Euro USD chart, and this chart has been defined for the candle period of 5 minutes each. With that, I have added the SMA 12 and SMA 24 to get us the price range for last 1 hour and 2 hours respectively. Along with that, we have this donkey and channel 24 and 48 in place to look at the price range for last 2 hours and 4 hours respectively. And as you can see, the price range has expanded a lot in last 1 hour or so, particularly if we look at this Euro USD price move. It moved almost 50 pips within this short span of few minutes immediately after the release of US CPI. The dollar gained, and those gains were not sustained. We again saw this reversal where the Euro USD went back towards the highest point. But from there on, it again reversed course to come back closer to this immediate swing low. Now again, we are seeing some stabilization on the lower levels. So as I said in my introductory remarks, the momentum is not unidirectional. We don't really have a strong momentum on either side. It is simply a variation with extended range. The range is wide. It is not that the range is shallow or narrow. The range is quite wide, but the broader momentum which we are observing in today's trading session is of sideways channel, even for the USD JPY, which has been gaining ground since yesterday. For last couple of hours, it has been consolidating closer to 134, and from there on, it saw the spike on the upper side. Again, this reversal towards this immediate swing low, and from there on, it bounced back to make a new swing high, just little shy of 135 level. And I think it is a matter of time before we will see the USD JPY again breaching 135, but it is likely to take some time. It is likely to take some time. We are likely to see it consolidating, and this momentum, which is looking bullish at the moment, I am expecting it to sustain at least for next couple of hours. So keeping that in mind, we can keep looking for the opportunities to trade. Now, of course, the obvious question is, if the clarity is not really there, if we have these confusing moves in both the sides, we have to figure out which particular currency is better suited to trade on which side in these kind of markets, in these volatile markets. So for that, we have to consider the USD/JPY's timeline in comparison to the other currencies, the major currencies like Euro USD, AUD USD, GBP USD, NZD USD, USD CAD, USD CHF, etc. So let's consider that. Now, if we compare the charting of the USD JPY with the Euro USD, you will observe that the JPY has been a lot more bearish in comparison to the Euro. Euro is not looking bearish at the moment, even though it has given up these immediate gains after the release of US CPI. It is not exactly bearish. It is in a consolidation phase. particularly after the reversal from these levels of 1.068. It has looked strong, but if we consider its medium term charting using the hourly candle period, we will have better clarity of how things are. So here on this hourly chart, you can see that Euro USD has been consolidating in this range, with the medium term formation being more favorable for the bullish trades in intraday as well. So as long as this immediate swing low of around 1.067 holds, we still have to go with the immediate momentum and expect this formation of higher highs and higher lows to continue for a while. So watch out for the price moves of the Euro USD in next couple of hours. So if we holds above these immediate swing low, I think maybe later in the day we will have to look for the buy on dips strategy for the Euro USD as well. The clarity is not really there. We don't really have that much clarity, so we will have to be cautious. We will have to trade during these confusing times. It is better to trade cautiously rather than be too full on the confidence side. We will have to take multiple factors into account while deciding on the trades. So here, as I said, the Euro USD is simply in a consolidation phase. Now again, it is bouncing back after getting closer to this immediate swing low. So these are the times, and we will have to adjust and we will have to adapt to these changing circumstances. Now I think the USD JPY is giving up some of these gains from these higher levels. So if we compare the Euro USD price formation with the USD JPY, you will see that for today's session in particular, the USD JPY has continually made higher highs and higher lows. So that count, the USD JPY is having more clarity in comparison to the Euro, which has not really looked that bearish. The JPY has looked much more bearish in comparison to the Euro. So even now, if you are expecting the dollar to trade strong, trade with bullish momentum, bullish bias, then the USD JPY is going to be a better buy rather than keeping a watch on the Euro USD for short selling opportunities. In terms of the dollar's momentum, the JPY is looking a lot more complementary, even though there is now this correction happening from these higher levels. So if we see the USD JPY holding above this immediate swing low around this 134 level in next couple of hours, we can indeed look for the buy opportunity in the USD JPY. And if you don't really expect these dollars strong momentum on the bullish side to continue, maybe you can change your thought, and Euro USD is not apparently that bearish. Rather than that, we are seeing some signs of revival on these lower levels. So you can even try your hands on buying the euro, but that is not obvious choice. I think we will have to look for the other currencies where things might have much more clarity. So for AUD USD, things have looked slightly better in comparison to the euro. Euro made days low in the European trading session, but for the AUD, the days low happened in the Asian trading session. From there on, it bounced back and went on to make these higher moves. Its prior swing low remained intact. It didn't really make a new swing low. So taken together, I think it is looking better placed in comparison to the Europe for any kind of buy on dip strategy. So the AUD is more favorable for the buy trades. AUD is trading strongly in today's trading session against the US dollar. And now if we have to compare it with the other major currencies, you will notice that here these turnaround from the immediate swing low or is also signaling the continuation of this momentum of making higher highs, and higher lows. So even now, if we see the AUD USD consolidating and again finding some bullish momentum later in the day, the obvious choice is going to be to buy it with the possibility of AUD USD crossing above 0.67, looking quite strong at the moment. It is a better place in comparison to the euro for buy on dip strategy, and also it is bearish like the case is for JPY. JPY is not in the same league as the AUD or for that matter even euro. Now we will consider the other major European currency, the Great British Pound (GBP). For GBP, there is not much of a momentum on the upside. Here it has made these days low, and again subsequently a new swing low was made. Even this volatility in aftermath of the release of US CPI caused the GBP to make a fresh day's low slightly below the prior swing low, even though it is slightly lower in comparison to the prior swing low. Still it is a fresh day's low. So on that count, the GBP can be termed as a lot less bullish in comparison to the AUD and of course even Euro. But then the question is whether it is looking bearish. I think it is not looking bearish either. It is simply consolidating with extended range. So with this thing in mind, of GBP being simply in a consolidation phase on these higher levels after having already rallied substantially in last couple of days. I think we will do well to trade cautiously, not expect the GBP to move much in today's trading session. Of course, the underlying bias has been slightly bearish for the day so far. So maybe again we might see the GBP dipping below this immediate swing low. That possibility is there, but still the GBP USD is not a natural choice for short selling opportunities. If you expect the dollar to strengthen further in the day, the JPY is looking a lot more bearish. So USD JPY is going to be a better trade for any buy on dips strategy. Now we will have to turn our gaze to the NZD USD. NZD-USD is trading in line with its Asia-Pacific peer, the AUD. There is not much of a difference in its price formation, but one difference is there that its swing low was lower in comparison to the prior swing low. So these days low happened after the release of US CPI, so that makes it more bearish in comparison to the AUD or even Euro, and in that context, we will have to eliminate it. It is not looking bearish either. Rather than that, we have the first choice as the GPY. So taken together these factors, I think density USD is going to fall in the middle of these other currencies which have much more clarity in directional terms. So we have AUD, which is strongly placed for a buy trade. We can adapt a buy on dip strategy in AUD and overlook the currencies where there is not much clarity like GBP, NZD, etc., and even Euro. We will have to now invert the scale and consider these currencies like USD CAD, USD CHF, USD JPY we have already seen. Now for the USD CAD, the momentum has been strongly bearish with the CAD having appreciated for most part of today's trading session, and even this immediate volatility has not caused the CAD to want to make a fresh swing high. So that puts CAD as one of the best placed currency for trading in the manner of its appreciation. We can expect the CAD to keep appreciating against the US dollar. It is looking even better placed than the other major currency we saw of AUD, which also looked much more favorable for the buy trades. The CAD is also appreciating against the US dollar even now. So I feel that CAD has to be categorized as the most bullish currency against the US dollar at the moment in the currencies which we have seen so far. Of course, we are yet to see how things are shaping up for the CHF, the Swiss franc, but till we see Swiss franc, the CAD is the clear winner in this correlational race where we have to decide which is the best placed currency on which side. So the CAD is most bullish of all the major currencies which we have seen so far, and of course the most bearish title goes to the JPY. Now we have to consider USD CHF also. For USD CHF, the CHF has actually depreciated, and again we are seeing depreciation in the CHF even now. So it is looking much more in line with JPY in its charting formation of making these fresh swing high. So the CHF has to be categorized as the bearish currency amongst these major currencies. But then the question is whether it is more bearish or less bearish than the JPY. And in that context, I think the formation is much more favorable for the USD JPY in expectations of its continuation of the current ongoing retracement. The CHF has started to find some support on the lower side, but it has to be placed behind the JPY. Even its move has only come in for last couple of minutes. Prior to that, it was simply consolidating. So if we have to go with this flow, the JPY is still better suited for the expectations of the continuation of the dollar strength. And if you expect the dollar to weaken further, then as we saw, the CAD is the better choice for any trade to be taken in which we can short the US dollar. Now let's consider the equity segment and how things are shaping up after the start of the US session. Now the daylight saving time phase has resulted in this change of market schedule. So we now have the US session starting 1 hour earlier. We saw increased volatility for equities also after this release of US CPI, and then after the US session started, that same increased volatility is ongoing. So we have this momentum in Dow Jones, which has been finding some support closer to the 31,900, and now it has been successful. It has been able to successfully hold above these 32,000 level. As of now, it looks like the immediate swing high, this yesterday's high of 32,250 is likely to be breached. We are still 100 points away from that, but if we consider this immediate swing low formation which has been higher than its prior swing low. So that opens up the possibility of Dow Jones Industrial Average climbing up towards the immediate swing high and beyond that. So the immediate momentum is looking more favorable for the buy trades in the equity segment as well. Let's consider how things are shaping up for the equity indices like S&P 500 and the Nasdaq. For S&P 500, there is not much of a difference in its charting in comparison to the Dow Jones. These are two having similar timelines, but for Dow Jones Industrial Average, it didn't really breach this prior swing low while making this dip. But for S&P 500, it breached this prior swing low, so that is going to put the S&P 500 at slightly disadvantage in its formation. So we have to give more weightage to the Dow Jones Industrial Average in our waiting in our trading preference. If we have to buy any equity index, then in comparison to the S&P 500, Dow is looking slightly better placed. It is showing not much of a difference. The difference is only minor. These few points, but still difference is difference. And on that count, we have to put the Dow Jones Industrial Average as the better placed instrument between these two equity indices. But before we can make our mind, of course, we have to consider the third major equity index, Nasdaq. For Nasdaq, the price formation is much more similar to the S&P 500 than Dow Jones Industrial Average. It also made this fresh swing low just below 11,900, and from there on it has rallied more than 1 percentage point. So in terms of its magnitude of this move, the 1 percentage point gains on almost 2 percentage point gains from these lower levels are quite substantial. If we look at the volatility for Dow Jones Industrial Average, it hasn't been able to gain that much ground, but still, even for the Dow Jones, the gains have been solid at 1 percentage point. The Nasdaq tends to be more volatile in comparison to the other equity indices, and that is what we are observing in today's trading session also. And before we can finalize which particular equity index to buy, we have to consider these medium term charting also, in which the Dow is still looking better placed in comparison to the S&P 500. And just wait a few seconds more. But on the hourly charting, the Nasdaq is emerging as the clear winner with its swing high coming in above these prior swing highs, and also in terms of the magnitude, its gains are much more robust. So for any buy trade in today's equity